Our guest today is the owner of JA Consulting and Tax Solutions. Dr. Tyra Jones is known as a corporate financial strategist, financial coach, professional speaker, and the mother of two wonderful adult children. She teaches her clients how to achieve their financial goals and structure their businesses so that they can walk in the purpose that God has given them. She also possesses over 15 years of experience in education and business development and has created a customized facilitated online business credit program to assist business owners with continuous business funding. Her belief is that if we know a way out, then we can equip ourselves with a strategy to learn the system of credit and reach our financial goals. Her goal is to show her clients that way out. Her company, JA Consulting and Tax Solutions, works with over 7 different lenders who finance her clients with lines of credit and investment loans. Welcome to the show, Dr. Tyra Jones.
All right. Welcome back to She is in Charge. Welcome, Dr. Tyra Jones. How are you?
Hi.
To get started, I'm happy to have you here. Happy to see your face again. Will you start off by telling us about who you are and what you do?
All right. I am an entrepreneur by spirit, and I'm a mother of 2 beautiful adult children who I'm trying to train in the entrepreneurial way. And I have a passion to help people, but I have a passion to grow as a business owner as well as an entrepreneur, as much as I possibly can. And with that, just being an entrepreneur just kind of opens your mind up to the world. My passion is about, learning how to overcome obstacles. And because that's my passion, and because I've recognized that's what I've always done in my life, I've just applied that to my business and anything else that I do. And so I try to make sure that transfers over to our clients, transfers over to individuals I network with, such as yourself. And I'm just really excited for the most part, to be here and also to be in the place that we're in right now in terms of, I know we're in COVID-19 times, but this has been a very good year for me.
You know what? I always say the blessings are in the chaos. So I'm glad you said that.
Yes.
Well,
Absolutely.
To add a little color for our audience, She is in Charge. Tyra and I met a couple of years ago. I reached out to her online and we discussed bringing her in to help me with a She is in Charge workshop, which was going to be face-to-face. And we worked together all the way up until this past March, until the Dallas and the Houston area and all of America had to shut down due to the health crisis that's currently going on. And I have learned this woman is all about the business. She is about helping women establish credit in their business, which we're going to get into a little bit later. But she is also someone who is kind-hearted, who is open, and who is just really focused on fulfilling her goals in life. Now, we're kind of all from the deep South area. I'm originally from the state of Mississippi, been residing in Dallas, Texas for the past 14 years. You're originally from Louisiana. You're giving us Louisiana vibes today. Although you're from the Louisiana area, I know that you have been in Houston for quite some time. You've been there for several years now. Tell us why you decided to migrate to that area.
Well, the diversity drew me here. I was living in Baton Rouge, Louisiana, even after I graduated from college, got married, and my ex-husband now, and I at the time was living in Baton Rouge, and I had a number of research jobs. My background is in science. Mm-hmm. So I was looking actually for a job, and back then, I guess I'm gonna date myself right now. The only way you look for a job is in the newspaper. So we didn't have Indeed, we didn't have all of that. But I was looking for work in Houston because I was in the oil industry. I was working in the laboratory in the oil industry. So that drew me to Houston. I knew I had an aunt who lived in Houston. So I asked her, I said, hey, can I stay with you for a summer? I need to work. I need to get a job, and only jobs that are available are out there. She said, sure. So I came to Houston, lived with her for a summer, had a phenomenal time living with her, got to know her a lot better. But what I also got to know is Houston. When I started driving around and looking at how big the houses were, and we had just purchased property in Louisiana to build, and I said, no. I told my ex-husband at the time, I said, no, we need to stop. The houses out here are way bigger and they cost less. So
Yeah.
that's what, I convinced him to come out here. And that's why, we ended up here in Houston. And to be honest with you, it's really been a good fertile ground for me. Because like I said, I didn't know that I had that entrepreneur spirit embedded in me. So this is just really good fertile ground for entrepreneurs altogether. So that's how I got here. But what kept me here, of course, is, entrepreneurship.
Okay. Now, I can't wait to just unlock all the knowledge that I know you have in your mind.
It's
so much
that bring it out.
Yes, there's so much you know and that you've done and that you're able to speak on. Oh my gosh, ladies, we're in for a treat today with this one. Tell us how it has been while in Houston amid such a large, diverse, and ever-changing metroplex. Now, as a single woman, you were a wife at one point, but now you're a single woman, you're still a mother, and you have a full range of businesses to run. But we're just going to talk about the main one today. How has it been? Because it's a growing economy still, and it's an economy now that is, I guess, according to everybody else, becoming overpacked in a way. How is that for you?
Yeah. It seems like it's overpacked because a lot of people are trying to, it's like everybody's trying to do the same thing, but, and then a lot of people are confused about, whether they should do it like the other person or whether they should step into their own authenticity and just do it their way. Even though there may not be anything comparable in the market, it has everything to do with confidence versus fear. So, with the business that I've been running now, I do have two on record. I'm only running two businesses, right? J Consulting and Corporate Tax Solutions, and my nonprofit, which is AMEC Programs. And the reason why I say that, I have consolidated to make sure that I'm only pouring into the main entity, which is J Consulting and Corporate Tax Solutions. And then I have my family helping me with the nonprofit, as well as some other closer friends who are on the board. So with that, it's just been, a big challenge, trying to market and trying to put things out there, especially when you're putting things out there that most people do not understand. Most of the services that we provide, there's an education, process that has to happen in order for them to even understand that they need your services. So the market is kind of, it looks like it's saturated, with a lot of people doing a lot of different things. It seems like everybody's doing the same, but there are some strategic ways to get the clientele that you really want.
That's a good point. Several good points that you made. When you're in a market like a Texas market anywhere, it's usually saturated, and it's usually a lot of people who are trying to figure it out, and they'll look at what you're doing, and because you make it look easy, you'll jump into that. And that's a mistake that I initially made coming into business. I was like, oh, well, she's doing it. She made it look easy for me. But then I got into the business itself, and I was like, oh, a lot of extra work.
Right. And if you're operating within the gifts that God is giving you, it's always going to look easy on the outside. Because when I look at you and I look at your post, and I'm like, oh my gosh, I love how she speaks. I love what she says. And then I say, it's just flowing. She's just not, and then she's beautiful. And I was like, man, okay, I'm going to one day, because I used to hate video. I used to hate speaking. I used to hate hearing my voice. So I used to look at people like yourself and be like, okay, she can do it. I can learn how to do it. But things that come natural for you looks easy to other people. But that's all the more reason why you need to be operating in your authenticity of who God created you to be. And everything would be, everything's going to be perfect just for you and your business. Yeah.
You're correct. And thank you so much, Tyra, for all those beautiful compliments, and same to you.
My pleasure.
Being that you are a serialpreneur with several years of experience under your belt by now, can you please share with us, your most tremendous hardship or failure as a businesswoman? I want to understand, the whole journey of the failure. How, what caused it? How did you overcome it? And what was your biggest lesson or takeaway from that experience?
Well, I can actually think about a couple of different occurrences where I failed. And I marked these as failures because right after the incident, I quit my business. So that's the only time you can fail anything is when you quit. But when you have an obstacle and you keep going and you just, you figure out a way to overcome that obstacle, that's not really a failure. There was just a challenge you have to face to keep going. But my failures happened after the incident and because I quit. The first challenge I had was with collaborations. In 2013, I tried to, open up my business to opportunities to collaborate with this gentleman out of Dallas, actually. And we did a contract. I've always been an advocate of doing business the right way. And he kind of tricked me a lot of it. That contract, he literally took out like most of the verbiage that protected me. And so at the end of it all, he ended up having all of my services on his website, and all the clients that I helped him to get, he retained. So it kind of left me out in the dark. Now that was a failure because number one, I had a feeling, a gut feeling that the contract wasn't right. I should have gotten a review by my attorney. Mm-hmm. And the crazy part about it is that I did have an attorney at the time, and I did not get it reviewed. I reviewed it myself as if I know what I'm doing. That was a mistake. And then the second mistake was that I quit after that. I was so overwhelmed by the fact that he had taken literally everything on my site, put it on his site, as if he was doing what I do, so that the people that I brought in as clients would patronize him and not me. So that was a failure because I allowed that incident to put me down in a way to where I just quit. I stopped running my business. The second time that happened was when I just got frustrated with clients, just being able, and this was like in 2017/18, very recent. And I tried to quit again. I tried to sell the business to a young lady, and the contract was great. We did everything right. At the end of it, she really was not, participative in that contract. So we agreeably parted ways, and I said, you know what, I'm going to table my business right now. But I couldn't table it too much because I still had clients I was serving. Mm-hmm. So and I quit. I literally quit. Yes. I was like, you know what? Forget this. I'm going to go. I know I have great skills. I'm going to go get a job. I'm going to save money. And then I'm going to, do the other things that I want to do. Well, that didn't happen, and mostly the reason why it didn't happen is because of COVID. January 1, 2020, I actually, I was flying around. I don't know if you remember seeing a lot of me posting a lot about, I'm in New York. Yes. I was consulting other business. I was doing what I'm doing right now, but for another company. I was contracted. And after that happened, we were laid off because in March, because of COVID, we were grounded first. Nobody could fly. And then we were laid off. And I said, you know what? I'm going to have to pick this back up again. So the amazing thing is that, like I said, I couldn't let some of my clients go because I was still servicing them. So even during that time I was servicing clients, it's just that I wasn't trying to go after more clients. Well, when that happened and I was grounded and laid off, I said, well, I need to pick this back up because this, it is a value. I've built it up. It's a valuable business. I built up the business credit. And when I valued it, when I got it valued, the value just basically told me that I had done a good job, in structuring the business. So I said, well, let me see what I can do. I picked it back up and I put some systems in place, which is very different from what I had in 2018. I put digital systems in place to where it is running now like an engine. And then I started hiring people. And this time, I've had employees before. This time I hired the right people. And it's just amazing how your mind is so different from the first time you do something than the second time you do something, because the goal is to learn from your mistakes, but sometimes we don't do that. We kind of repeat our mistakes. But this time I learned from my mistakes, growing the business continuously, and we have some phenomenal team members. We have 8 team members now who are every day working to build for their families, and they're passionate about what JA is all about. And I'm even more passionate about going out there, creating opportunities to bring to the company, because they are such great teammates for me. So, you know, it's just been a journey, and my failures, like I said, my failures only happen when I quit. So,
Wow.
you know, we have challenges and everything in business all the time. The main thing is that we just don't give up, because what's for us is for us. It's not for anyone else.
Well, Dr. Tyra, you just dropped all types of nuggets in there. Audience, I hope you're catching it. Those $1 million nuggets. And I say that about every woman that I bring onto this show, because these women are truly actualizing what they do and who they are as business women, regardless if they are on the corporate track or on the entrepreneurial track. They know what they're talking about. And the thing that you said about getting your lawyer to review your contracts, there have been a number of times when I first started out in business where I would receive a contract or red lines from a client of mine, and I'm looking through it for myself thinking, okay, I know what I'm reading. This says this, that, and the other. And then I give it over to my attorney who you met, and she's like, girl, let's take out this, let's take out that, let's take out this. None of this contract protects you. Exactly. So it's a good thing to spend money on not only an accountant and not only getting business, getting your business in line on an automation side of it, but also get your attorney. That's the first person you need to get through the form of business. So
right.
Thank you for that. And thank you for letting us know you chase your dreams, and what is for you is for you. Correct.
Right. That's right.
Now, Dr. Tyra, we've partnered on a project before, like I stated earlier, and because I reached out to you, and again, I asked you to co-host one of my previous years InCharge workshop events, and you agreed to do that. So thank you.
My pleasure.
Based on our engagements from that project, and during that time of frame, I have come to know you as being the type of person who recognizes her weaknesses in terms of business. And I believe that as a person's ability to recognize their strengths and their weaknesses is a gift that leads to strong foundation for effective and prosperous partnerships. Yeah. And I know you're a person who believes in partnerships, and you believe in building out teams. Out of all of the knowledge that you carry as a teacher or as a coach, as a businesswoman, I've heard you speak at length about 2 topics primarily, and they are about business credit and strategic partnerships. And we'll get to the part about the credit, like I said, a little bit later on in the conversation. But outside of collaborating on short or long-term projects, what are your beliefs about developing partnerships?
Well, first off, my belief in partnerships is, to me, that's one of the first marketing activities that a business can put into place, or should put it into place. Collaborations are very important to your business, because you can leverage from, other companies. You can leverage from your friends' companies. For example, even a nonprofit. I just had a conversation yesterday or day before yesterday, could have been either day, but with a nonprofit or a founder. And I say, you really need to look at your business like a business. Don't look at it like you can't make money in your nonprofit, because a lot of people think that, and I say, do you have any friends that have businesses? Okay, reach out to them and ask them if they could take one of their products or one of their services and do a promotion where they give you, they donate to your organization 10% of the proceeds of that particular service or product, and you help them market that product. Mm-hmm. Hey, buy this product because they're giving 10% donation to our organization and for this cause. Everybody has a friend who has a business, and that's, and we see a lot of people say, share my links or patronize my business and things of that sort. but nobody thinks about collaborating with the people they already know, or even people that they don't know. Reach out to people that kind of mimic or relate to what you're doing, and offer to promote what they're doing. In return, donate to your organization. And so collaborations to me, that's just one example, nonprofit to for-profit. Collaborations to me are the lifeline of your business. If you ever run out of leads, hey, how can I help you? Is the question that you need to be asking other people. It's not about, do you have any money to donate? No, don't ask people to give you anything. You need to ask people, what can I do for you? Right. When the well is dry, when the well is dry, that's the first thing that you have to ask. What can I do for you? Because if your well is dry, it's because you're not giving enough. And the law of the harvest is real. Yeah. So
you're preaching to us today.
I got chills in the middle of that. So.
Audience too, I want to point out when she says collaboration, we're not just talking about you getting together and calling your girlfriend and calling your guy friend and saying, hey, let's work together on this project to do it together. We're talking about affiliate partnerships. We're talking about doing joint ventures. We're talking about bringing in those individuals to help you build a board of advisors, and you also paying them, giving them a percentage of the money that you make from whatever business deals you have. I built my businesses off of collaboration, because in starting out, especially if you're an entrepreneur, a lot of the times you don't have money up front to bring in a team, and if you do, it's kind of like, I want to make sure I'm generating enough revenue and also making a profit before I start bringing in a full-time team.
Right. Mm-hmm.
But that leads me to my next question for you. How can partnerships or certain types of partnerships affect small businesses during the application process to obtain business credit?
Oh, to obtain business credit. Oh my gosh. Yeah, thank you for that. That is a perfect question. Wow. The amazing thing is that your collaborations have everything to do with you getting started with your structure in business credit. Everyone, when they first start building the profile, everyone wants to go after Uline, Granger, or, some of these other net 30 companies to put on their profile. But, and when our clients, we tell them, who are you patronizing right now? Who can you patronize right now? Who have you paid to do anything for you in your business? Well, I have a friend who did this for me. Did you pay them? And then, and most of the time the answer is yes. Like, those are your first vendors on your business credit. We work with a lot of people in the program, but with a group of people that I'm thinking about right now, we've reached out to their colleagues that they've actually networked with or had collaborations with, and they actually transferred, monies. They paid them to do something, and, they had them on as a client. We put them on their business credit profile because it's always hard to get the first 3 or 4 vendors on your business credit. It's always hard because they're waiting on Uline to report. They're waiting on these other companies to report. Reach out to your collaborations and say, hey, I'm adding you. I want to add you as a vendor on my business credit. Do you mind going through a 5-minute confirmation process with Dun & Brad? It's like, okay, sure, great. All they're going to ask you is this person a client? You say yes. They're going to ask you how much did they, what was the largest amount of money that they've ever owed? You give them the amount that they paid or the largest amount. And then they ask you about, what terms was it on? Was it net 30? Did they pay you 30 days later after the service, or was it upfront? Oh, it was upfront. Great. Thank you so much for confirming this account. 5 minutes. And then now you have a vendor. So, and you get 2 or 3 of those. Now you have a payday score of 80, which means that's just like having a personal credit score of 720 or 800. So okay. for a company that, especially, let's say that your personal credit is challenged, you want to set up business credits to run your business. Get 2 or 3 of your collaborations that you've partnered with, and you have an 80 paydex score. Now you have credit to where now you can go after cash credit. The next type of credit you can go after is, they may offer you maybe 10 to 15 to even up to $40,000 as a line of credit where you can spend anywhere. This is not to specific vendors for their products or services. This is money that you can actually say, hey, if I'm going to purchase a property or buy some equipment, I have about anywhere from $10,000 to $40,000 to start off with, because I use my collaborations to put them as vendors on my business credit. So now I'm able to build quicker. So that's how your collaboration can actually help you to build your business credit. Now, if you're bartering with your collaborations, it's not going to help you. It's not going to help you. There has to be a transfer of funds. You have to say, hey, I'm going to pay for your services, and in turn, I want you to be confirmed as a vendor on my business credit account. That's it.
Nuggets. I hope you all are taking notes. She just gave you so much in that, but I wanted to clarify something, because I was listening to you, and I know you said it's very easy. All you have to do is show that they've made the transaction, but what type of paperwork do they ask you for? Are you saying they don't ask for any paperwork, or do you have to show the receipt? What is it? Because I know that when you pay a partner or pay a vendor, you usually want to have a receipt, but what else can you show them?
Well, here's the thing. Dun & Brad doesn't want to see anything. They're just confirming. You're basically telling Dun & Brad, yes, this person is a client or has been a client. This is how much they paid me, and these are the terms that they paid me on. Do they? And another question they ask: do they owe any outstanding balance? If there is no balance owed, then you just say no. If there is, and it's okay if it is, then you let them know what that is. But they're not going to ask for any documentation. But I do advise that the documentation is appropriate for both, and benefits both businesses. Definitely have, you can use QuickBooks, to send invoices. They have systems like Square. They have, of course, PayPal. I don't like PayPal, but they have all these other systems that you can use. I would say I hate it that I'm going to say Cash App. If you have Cash App, please upgrade to some other system that can actually do your payroll. But worst case scenario, if you do, you still have invoices that you can download. And I didn't know this about Cash App. But, for those type of systems, like I said, you want to upgrade to the QuickBooks so that you can actually have P&L statements and everything else, because down the line on your business credit, you're going to need to upload some of your P&L statements, which you would have if you have the QuickBooks, which is only about $20 or so, $29 a month. So yes, Dun & Brad is not going to ask for any documentation. They're only going to ask for a confirmation. They'll either do that via email, and you reply to the email, give them the information that way, or they'll make a phone call and they'll ask you that question. They say thank you, and they'll confirm it, and everything is lovely.
Right. And the point you made about PayPal, a lot of people can't stand PayPal. I actually use PayPal. And I do know that through PayPal, they offer business credit once you've had so many transactions. And I think it doesn't even matter the amount of the transaction. They will give you business credit after so many transactions. So that's the point. There's a lot of other systems out there that do that. But yeah, PayPal is, PayPal gets down a certain type of way with the payout once you get paid a certain amount. So it's a little different.
Now, what PayPal does is it's credit for your business, but what it is an MCA loan. It's an MCA loan. So it's a merchant cash advance loan. It does not report to your Dun & Brad.
Okay.
So,
good information there.
Yeah, it does not report to your Dun & Brad. There are companies that will give you credit, or even give you advances like the MCA loans, but they do not report to Dun & Brad, which, is good if you, need the cash flow, but it doesn't benefit you because they don't report.
Yeah. Wow. So now you mentioned business credit versus personal credit. And I've heard all kinds of mixed reviews about whether or not personal credit affects your business credit. Dr. Tyra, does one's personal credit impact his or her business credit? And if so, how?
No.
Okay.
And that's the end of that.
We got the answer to that question, everybody. Your personal credit does not impact your business credit.
Has completely nothing to do with it.
So now, according to Forbes, one of my favorite articles and publications, of all the businesses that seek credit, 31% applied for a credit card and 86% sought a loan or line of credit. And not surprisingly, according to them, the approval rates are highest for companies with higher revenue and more employees. And that, again, is cited by Forbes. But what I want to ask you is this. What's the difference between applying for credit and seeking a loan or line of credit?
Oh, great question. Applying for credit is me going online to Chase Inc. They have a business credit card, right? Mm-hmm. I'm applying for a credit card online, or me going to apply for an American Express. That's credit. That's the credit card. But a line of credit is me saying, hey, I want to apply for a line of credit of up to $40,000, $100,000 or whatever. Some companies do both, but most companies do one or the other. The line of credit can come in two different ways. It can come in terms of cash in the bank. Let's say that, we have a client that they want to apply for a line of credit. We send them to one of our 14 vendors. One of our vendors say, hey, they qualify for this type of line of credit. We'll deposit the funds only into a business bank account. They will not do that for a personal account. Only into the business account. They deposit the funds. You use the funds however you want to use it. That's one type of line of credit. Another type of line of credit is let's say you get $40,000 line of credit, but you don't use it until, you don't pull from it. So it's kind of like sitting in this escrow account to where you not charge interest on it until you actually pull from it. Let's say that I need to buy equipment for my business and I need about, $10,000. Well, I'm going to get charged a fee on the money that I pull, only the money that I pull. But the beauty of it all is that I may have $100,000 line of credit. I may not be using it, but what I can do, I can leverage myself, leverage my business, and get more cash flow and say, okay, I got a line of credit from this company. Now I'm going to go to my credit union or my bank and say, hey, bank or credit union, I have a line of credit from this other company. Can you match it? And they will match it. We've done that with several clients, told them to go to their bank after we get a line of credit. Go to your bank and tell them we just got your line of credit and ask them to match it. They will match it, and they will do kind of the same thing to where they have a separate account set up, and they have a pool to where they're pulling the money as opposed to them being charged the fees up front. So there's different types of lines of credit, but as far as a credit card versus lines of credit, they are very different.
Thank you for.
You're watching She Is in Charge, the platform where provocative, empowered, educated, and ambitious women come together to share our thoughts, experiences, and expertise about business through the lens of corporate and entrepreneurial leadership. When you subscribe today, you'll also gain lots of access to free resources, tools, tips, and strategies that will help you maximize your corporate and entrepreneurial value. I'm Meredith Ward, your career and startup CEO strategist, leadership coach, and host of the She Is in Charge platform. As usual, I hope you enjoy the video today. Please subscribe to the She Is in Charge channel on YouTube. And don't forget, click like, comment below, and share this video with everyone you know.
Must emerging or new business owners have generated a consistent flow or a certain amount of revenue before pursuing a business line of credit? And like I just stated, I don't want you all confused. PayPal will give you credit after so many transactions, right, not a certain amount of revenue. But what I'm asking Dr. Tyra is, must you have already generated a consistent flow or certain amount of revenue before pursuing a business line of credit?
No, not necessarily. A business line of credit is different from what PayPal does. What PayPal does, like I said, is considered an MCA. It is a loan because they do charge you, interest on that if you don't pay it back in a certain amount of time. MCAs are considered loans. We have a lot of lenders who do MCA loans. A business line of credit will more so look like, it would actually give value to your business. Like, let's say that you want to get a contract. Let's say that you're working, you want to get a city contract. A line of credit that on your business credit report gives you leeway to say, hey, if I have this line of credit and it's reporting on my Dun & Brad, and then I go after this contract with the city or a contract with, some other contractor, then I can have that on my business, my Dun & Brad account. When they look at my profile, because they are going to look at your profile when you apply for contracts and when you're bidding and all of that kind of stuff, they're going to see that, oh, this company gave them a line of credit of $100,000. So what? I haven't used it, but it looks good and it increases your score and it increases your chance of getting other contracts. So that, in comparison to like an MCA, MCAs are good. They do not report to your Dun & Brad.
All right now.
Yeah. So MCAs are like loans. Yeah, that's more so like loans rather than lines of credit.
Y'all, we are in a workshop right now, okay? Thank you, Dr. Tyra. Now, I asked you about partnerships earlier, and I don't ask questions just because I want to ask them. I ask them because it unwraps more information and leads to the next question and leads to other things. It leads to a why. But I've heard different experiences about establishing business credit when there is an equity partner involved. Now, earlier we talked about building collaboration through affiliates or through joint ventures. An equity partnership is something different. It's more permanent, okay? And everyone's business situation is different. And so my next question is actually twofold. One, if there is an equity partner involved when a business is applying for a line of credit, a line of business credit, is it similar to buying a house whereas you have two credit scores, meaning one person's credit may be good or excellent, and the partner's credit may be fair or bad, thus lowering the amount of credit for the overall approval rating to receive any business credit or to decrease it? Does that make sense?
Right. Yeah. It kind of makes sense. Well, okay, it depends, and I'm gonna give you a couple of scenarios. For the partnership, it depends on how the partnership is structured. If the let's say that you and I, we're in partnership with within a business, and let's say that you own 80%, because we have to identify the percentage of ownership, on our operating agreement, right? Let's say that you own 80% and I own 20. And then let's say we go after, the company goes after a line of credit. Well, it depends on what the qualification terms are for that particular lender. Let's say that this lender says that we need to know, or we need the information on anybody who owns more than 20% of the company. Well, if I own 20% and I don't own anything more than 20%, they're not going to need my information.
Okay.
Right? Okay. Now, going back to business credit, they're not going to ask for your information either, because this is business credit, not personal. It depends on the structure of your business credit as to whether they ask for a personal guarantee. Okay. Because the whole idea of business credit is to not use your personal information at all. The only personal information they may use is identifying who you are. We identify that you live in the United States, that you have an address in the United States, because they will not loan from individuals who have not been here X amount of years, right? who are not citizens. And so they may ask for your driver's license, but they're never gonna, if it's not a personally guaranteed line of credit, they're not gonna ask for your social security. They're not gonna ask for any other information that's not on your driver's license. Okay. Now, if it is a personally guaranteed scenario and you and I are partners and I own 20%, you own 80%, and it is personally guaranteed, they're going to ask for your credit report. They're going to ask for my credit report. Okay. Regardless of the percentage of ownership, they're going to ask for both of our credit reports. Okay. So that makes a difference, because if my credit report is bad and your credit report is good, and we try to qualify for a line of credit that's a personal guarantee and we're partners, it depends on the terms of and the underwriting of that lender as to whether or not they offer that line of credit. Okay.
Oh, wow.
It depends on how they structure their program. So so hopefully those, kind of explained it. But personally guaranteed loans or lines of credit is what we're trying to get away from when we're establishing business credit.
Right.
So that you can take the time, if you're rebuilding your credit, you have the time to rebuild it, because nobody is going to check it. And then what a lot of people do as they are applying for even credit cards or lines of credit, they go ahead and freeze their personal credit file so that nobody can look at it. The only challenge with that is that they can't do a soft pull to check your identity. Just to check to see, okay, this person is a person who is a citizen and, has a credit file, personal credit file. They may do a soft pull just to check for your identity, but outside of that, there's no personal guarantee.
Now, what are the pros and cons of business credit for individual owners versus, like I said, equity partners? Are there any pros and cons there? Because it's a difference, when you're individually owning your business versus you actually having a partner who takes a percentage of the profit.
Oh, well, you don't have to worry about the partner taking percentages of your, of your lines of credit or anything if you already have an agreement in place. That LLP that you put in place, it already identifies what percentage of any proceeds that come or revenue that come through the business, like whatever your percentage ownership is, that's what your percentage of line of credit should be, right? So it really depends on what is in the LLP agreement. It also depends on what the operating agreement says as well. And if it's a nonprofit, it depends on the bylaws, because nonprofit, you don't own the business. The board of directors own the company. So it depends on what goes on in the bylaws as to where those funds go.
Wow. Now, what are some of the red flags that lenders look for when business owners are applying for business credit? Because I know there has to be something. I know you can't just apply for business credit or a line of credit and tell them, oh, I plan on paying off my debt with this. What are some red flags?
Well, you can. It's a business, line of credit. You can pay off your business debts.
Not personal debt, though.
Depends.
But what I'm saying is, I know that they look for certain things, and if you're applying for it, it's just like applying for a grant. What are you going to use this money for?
Right.
Is it going to be for the business, or is it going to be for something on the personal side that has nothing to do with the business?
Right. Some lenders ask those questions, but most don't. Okay. Because when you're in commercial lending, all they want to know is, do you have a corporation? They're going to ask for your corporation paperwork, and they're going to look you up in the Secretary of State. They're going to ask for any operating agreements and anything like that. Once you get the line of credit, you do what they don't. It's not like a grant. They don't monitor what you do with it. They don't really care. If you, all they care about is you paying it back, right? So commercial lending is very different in that they really don't micromanage you once you get the funds. Now, some red flags, like if you're applying for a line of credit, red flags are if you have a Yahoo, Gmail, or Hotmail email. That's a red flag. That will get you denied. Putting your residential address on your application as a business address, that would get you denied. Not having a website. And a lot of real estate investors say, oh, well, I don't really need to market my business. No, you don't, but you need lines of credit. So we need you to set up a basic site. Make sure your email is connected to your domain. So if you have abccompany.com, you need to have an email that says meredith@abc.com, abccompany.com. Okay. So, you know, those are some non-traditional type data that would red flag and get you denied for a line of credit. Now, after that, it's really all about being truthful to your best ability on your applications. Okay.
Be truthful.
So be truthful. But there's a gray area when you're doing applications for commercial credit. There's a gray area where a lot of people don't understand a lot of things they do personally, especially entrepreneurs that are small businesses. There are things that you do personally that are actually are business expenses. Mm-hmm. So it's okay to pay that with a commercial line of credit. You know, so there's some gray areas that are allowed, but outside of that, to get approved for a line of credit or a credit card, anything like that, that non-traditional data is so important. And a lot of people, I was on Facebook the other day, and somebody indicated in a group I'm in that she was happy. She got her Google Voice business number, and now she's ready to do business. I'm like, no, you're not. They're going to red flag that. Do not use Google Voice for your business phone. Go to your carrier of your cell phone company and tell them you want a commercial line.
Right.
Yeah.
I think it's also too, if it's actually through a business line, a service or a phone line that's set up as a business line. It doesn't have to be a 1-800 number necessarily.
Exactly.
It has to be a business line.
A business line. Right.
I just love you. I'm telling you, audience, this woman has so much knowledge to share, so much real advice to give you, things that she has actually done for her clients, things that she has actually lived through as a businesswoman. Man, you have no idea. Dr. Tyra is on it. But we're wrapping up the conversation today. I have a last couple of questions to ask you. The final one about the business credit, though, is to really share with us some uncommon and critical loopholes that startup owners might want to be aware of and or fix before trying to establish business credit.
Before trying to establish business credit?
Mm-hmm. Or a line of credit.
Let's see. Loopholes. Well, that's one, you know, the non-traditional data is one of the most important parts, mm-hmm. you know. And then I would say, and the commercial address, I didn't mention that part. A lot of people some people know about virtual addresses, some people don't, but you know, it's what lenders and creditors, what they look at the fact that when they look at your application, did you invest in your business to at least have commercial address, commercial phone number, commercial email? Because if you just, you know, you have the Gmail, you have your personal cell phone number, you have your home address, you didn't invest anything the way that they look at it. You didn't invest anything in your business. So that's number one, to make sure that you do that. And the commercial address, you can do regus.com, regus.com. You may have to pay $20, $30, $40 a month, something like that, but it's an investment. That's what they want to know. Did you invest in your business? The other things are, you know, learn. You need, you know, a lot of people, and I'm thinking about these posts, 'cause look, I'm up like to 2:00 in the morning. I should be asleep, but
I know you're up.
And I'm looking at these posts of different people asking these questions about business credit and then making statements that I'm like, oh no, don't do that. You know, a lot of misunderstandings and just misconceptions about business credit. Get into a program where you can actually learn, where they actually will handhold you, and you can actually learn about how to build. There is a strategy to building. It doesn't happen just because you call this company and they approved you.
Right.
You can call 50 million companies and they get approved, and none of them will be reported on your Dun & Brad. Actually, I'll say we saved the client from a competitor. They have this great marketing. They have funnels. They have all this great marketing that they have online, and they advertise business credit. Get $50,000 worth of business credit within a certain amount of months using only your EIN.
Mm-hmm.
That's the advertisement. And I'm be honest, it was Fund and Grow. I'm just gonna say it. It was Fund and Grow because they shouldn't have did him like this. When he came to us and he said, well, I hired this company, I paid them X amount of dollars to, get my business credit. It's been 3 months, I haven't heard from them. And I was like, you haven't heard anything? I said, well, let's look at your policy. Let's look at your agreement. Let's see if you can request your monies back. So he requested the monies back. When he requested the money, then that's when they said, oh, well, we're going to do it. We're going to get you your line of credit. They got him a couple of credit cards, right? And then after that, I was like, okay, well, while you're doing that, because he was going to use the money to pay us to build his business credit profile.
Right.
I said, while you're doing that, I'll do some research on your profile. I went into the system and I couldn't find his business profile. And I called him. I said, well, you sure you have a DUNS number? So we found out he didn't even have a DUNS number. So they had gotten him those credit cards, but he didn't even have a DUNS number to start setting up his business credit portfolio. So when he was able to pay us to go ahead and get started with the program, we talked with Dun & Brad. We got his DUNS number and everything. Dun & Brad is a pay to play. If you pay them now, they'll give you a DUNS number. If you pay them later, they'll give you the DUNS number later. So we paid them to just expedite everything. So now to this day, he has an 80 payday score. He's at a tier 2. There's several tiers in business credit. And he's on his way to building a $250,000, maybe even $500,000 portfolio for business credit because he's a real estate investor. And actually, we're about to close on his first properties with us. He just bought 3 properties. So it's just amazing what's out there. Just be careful. Yeah, what information that you get. Just because it's flashy doesn't mean that it's good for you.
Wow.
So that's what I would definitely say as far as building the business credit. Just make sure that you are in tune with, people who are actually going to sit down and teach you this stuff. And in our program, it's mandatory. We have a lot of business owners. They're really busy and they don't really have a lot of time to do the coaching and go online because we have a self-paced program where they have a login, they can go in, watch the videos and things of that sort. They don't have a lot of time to do that. But I said, well, you have 12 months. You have 12 months to complete it. Okay. But your coaching, we got to be on point with your coaching because I need you to understand what we're doing, where we're going. So get with a program that's, similar to, I would say get with mine, of course, but get with a program that will teach you because they're not going to be there years and years later when you're still running your business and you don't want to have to go back and say, and pay somebody to teach you something you should have learned the first time.
Right.
Okay. So, yeah, that's what I would say. And we offer free events for business credit as well. We do it every 2 weeks.
We're going to get into that. We're going to get into that.
Huh?
Oh, I said, we're going to get into that because I'm going to ask you about your upcoming.
Okay. I'm going to hold back on that one. But yeah, I'm very passionate about education. That education background that I have, I was a great teacher, I believe. And I believe that because I still have relationships with the parents of a lot of my students we talk on LinkedIn. One of them I actually hired. One of the parents I actually hired in my company. She's been with us for 3 years now. And so I just, based on their, comments on how I impacted their lives and their children's lives, I'm just really passionate about education no matter what I do. So it's just all about teaching and learning and making sure people have the right information,
Definitely. Well, Dr. Tyra Jones, I so appreciate you for allowing me to interview you today. I certainly appreciate all of this knowledge, these billion dollar nuggets
They are.
you dropped on us today. And I'm also looking forward to whenever this pandemic is over or gets under control, that we actually work together to fulfill the workshop that we're working on initially, because I just know you always bring value wherever you go. So to close out our conversation today, tell us something either unique about yourself or share one of your favorite quotes.
Unique about myself? Oh, okay. Well, I always talk about basketball.
We know you are the basketball fanatic. This woman right here used to play basketball, but go ahead, tell us.
Yes. I did not play that well, but I played. So, but, and I say that because I didn't go to the WNBA. But, but yeah, and actually WNBA did not exist when I was younger. So that tells you how old I am. But yeah, my passion is, anything outdoors. I have an active personality. I'm literally like this all the time. I love giving people information. I love coaching, because as you can see, I just went over your question. I'm just like giving. But I'm a very active person, so I like outdoor stuff. I love basketball, and actually in my nonprofit, we have a AAU team that my son and I are organizing for next year. So I'm just, that's something unique about me. I don't know. I love seafood. I don't eat meat.
Goodness. You're from Louisiana. The deep south at that. Everybody in the deep south loves seafood for the most part. Some people
That's true.
Me. I am from the deep south. I love seafood. Everything I cook for the most part is fish or seafood. So
yeah.
Well, I also want you to share with us tell us about any kind of upcoming events, services, or products that you have on the horizon, and also tell my She Is in Charge audience how they may get in contact with you, because I already know there's going to be a whole lot of new business coming your way, especially to get line of credit or apply for business credit. Let us have it.
Yes, thank you. Yes, absolutely. Well, we have a couple of things coming up. We have an event coming up this Sunday. What is this? November the 8th at 3:00. We have a Zoom event. We're going to be talking about, now we do this every 2 weeks for business credit, but this week is going to be very special. I've never done this particular presentation before. It's specifically about contracts and grants, getting contracts and grants using your business credit. So yes, this is for nonprofits and for-profits, okay? That event is coming up. We do that event every 2 weeks, like I said. Another special thing that's coming up, I am going to be writing for a business column for the Shreveport Sun, my old hometown, Shreveport, Louisiana. They are one of the oldest Black-owned newspapers in the state of Louisiana. They are, this year, 2020, they made 100 years. So, and the amazing thing is that the founder, I forgot his first name, Collins is his last name. One of his descendants is still working in the business, Ronald Collins. He's still working in the business. So I'm just excited to be writing that business column. And I went out there last week, and we're gearing up to do some things. So that's coming out in in about a week. That article is coming out in a week. So I make sure that I send it to you some kind of, and see how we can, put it out there. But those are two things that are coming up. I'm looking forward to that, so I can impact the business community in my hometown, as well as, explore my passion for writing. That was another unique quality. Yeah, I like writing. So,
yeah, you are the bomb grant writer, business plan writer. I told you we here. And as far as affiliate partnership, we here.
Absolutely. Absolutely. Yeah. Because I want to make sure that my collaboration, especially when I enjoy a person such as yourself so much, I know that it's a matter of time to where we can impact each other and pour into each other's businesses. So yeah, I'm definitely looking forward to that.
Well, she is in charge. Audience, you have gotten the realness of Dr. Tyra Jones today. You have gotten, again, billion-dollar nuggets. I hope you all took notes today. I hope you all enjoyed this woman, this conversation. Make sure you comment down below, like this video and share with everyone you know. And until next time, think it, speak it, write it, and work it into existence. Bye now.
Well, she is in charge, family. I hope you all enjoyed this video today and took lots of notes. Remember, it's all about purpose. Think it, speak it, write it, work it into existence. Until next time, subscribe to the She is in Charge channel on YouTube. Don't forget to click like, comment below, and share this video with everyone you know. Thanks for supporting.